Roy Smith is our corn and soybean market analyst this week. The 2015 corn harvest is wrapping up. U.S. farmers are 96% finished, 2 points ahead of the country's 5-year average pace. In Nebraska, growers have picked 92% of the crop, 2 points behind normal. Ohio has now joined Illinois and Missouri as the only states completely done with corn harvest. The USDA is expecting big outputs this fall, including record corn and soybean production in Iowa, Nebraska, and Minnesota. We talked with Roy Thursday morning to get his views on current price movements.
The only thing I can say is we've got a big crop, and the crop is bigger than what the trade anticipated. The crop is bigger than what most farmers thought they were going to have, and we're seeing the results of that now in the, I guess I'd say, the slowness of the market. The market's just kind of
treading water.
Treading water, I guess. Yeah, that's a good way to put it. It just isn't going anywhere. It tries to go for a couple days and looks pretty positive, as it did earlier this week, and then just kind of dwindles down to almost nothing.
We talked maybe 4 or 5 weeks ago in mid-October, and then we were talking about tracking the dead cat bounce. Since then, where have we gone?
Basically, the dead cat bounce has gone to the bottom and stayed there. I mean, it's very frustrating having watched this particular move for over 20 years, and I've never seen it act like this. It just seems like it can't get going, and you wonder, well, what's so different this year as compared to other years? And the only thing I can say is that the market is probably telling us that there is a huge crop out there. Now, having said that, I drove in some areas of southeast Nebraska earlier this week, and I don't see the big piles of corn that we have in a lot of years when the yield is good and the quality is wet, but that may be a function of all these new silver grain bins that we see this year that haven't been there last year or the year before that.
Because of the struggle of the dead cat bounce, are you resetting the target that you would pull the trigger at?
Well, absolutely. I reset it in terms of dates, maybe not in terms of price. I doubt that we're going to get up to the level where we're $1 a bushel over the harvest low, which is what I always look for. So, I think there's another saying that I have, a drop dead date. At what point you just give up and walk away and take what you can get, and normally December 31st on soybeans for me. Everybody's got their own level, but for me, December 31st for beans, because I don't want to pay storage on the few beans that I raise. July 1st for corn. Well, we're a long ways from July 1st, and these bins that you see here close by are full of corn that's 14% moisture, so there's no hurry. Plus, there is no southern hemisphere crop to hold over the market, so I think corn has some potential just from a seasonal standpoint. Soybeans, if we don't see it in the next 6 weeks, there's going to be a lot of giving up and taking what you can get. I don't like to market that way, but that's the situation we're in. We don't want to let the storage costs eat up the value of the beans.
You said one of the keys to watching the dead cat bounce was also watching what basis did. That basis also had to improve. Has it?
The basis absolutely hasn't improved at all. So it depends on where you're at. Certain elevators or certain processors have maybe bumped the basis a little bit to try to shake some beans loose out of the country. But it's very frustrating knowing what I do about the dead cat bounce and the basis, that previous years before the soybean harvest was over, we've seen that basis start to improve. This year it didn't do that, and in fact it hasn't improved any now that all the beans are out of the field. So it really is enough to make an educated farmer scratch his head and say, what's going on here? Well, I don't know what's going on, but maybe we need to deal with this situation, and don't let those beans sit in the bin and eat up the value of them in storage costs.
The final question doesn't necessarily relate to corn or soybean markets. It might be a little out there, but we're doing a lot of interviews and talks throughout the winter season about the tough times ahead for agriculture. In your past years of farming, when you know that it's going to be leaner and the margins are going to be tighter, have you done anything differently with either a marketing plan or the way that you're managing your input costs and things like that?
Well, personally, no, I haven't done anything. I guess it depends on the scale of your operation. If you're a really big operator and have a lot of money borrowed or paying a lot of cash rent, I think prudence says that you need to be very careful and not to run up a lot of debt. For people who are say average size and maybe have some equity in their land and machinery and so forth, there's a limit to how much you can cut back before it starts hurting your income, and I think you need to be careful that you don't cut that fertilizer back too much. Don't cut back on herbicide. Personally, here in my operation, we've sprayed our pre-emergence chemical on soybeans for next year because we can do that now while there's time, but also we want to try to control the water hemp, which germinates in the fall or very early spring. The other thing is we had some corn yields that are very close to 200 bushels an acre dry land here in this area, and you have to understand the nutrients that they take out of the soil, because if you don't replace those nutrients, it's going to bite you 2 or 3 years down the road.